at Century 21 Goodyear Green, live from Edmond. Be sure to drop a comment below and let us know where you are watching from. Today we're going to talk about finding money to buy your first home. We're going to be with Beau Bird of First United Mortgage Group. Hi, Beau.
How's it going, guys?
You can find him on Facebook over at Beau Bird Home Loans. He's going to give us some information today about there's a lot of things that go into buying a home. You need to have money for deposits, down payment, closing cost, earnest money, all of these things. But there are some ways that you can find that money, and he's gonna help us out. And if you can't hang out and watch now, don't worry. You're going to be able to catch the replay anytime. You can either see it here at Okie Homegirl on Facebook, or, like I said, go over and check out Beau's page later. He'll be sharing it. So first I wanted to talk a little bit about how I met Beau. I've only known him for just a few weeks. I was actually working, helping a buyer, and he was using one of those big box national lenders. They have a lot of commercials on TV, and we won't name them. But he was having, some struggles with them, and decided that he would be better served with a local lender. And so somebody referred him to Beau, and he came in kind of at the 11th hour, and we still closed on time. We didn't miss a beat at all. And thank you for that, Beau.
Team effort.
Yeah, it was. It worked out really well. So, look, again, there are several things that go into buying a home. Last week, I wrote a blog post over at okiehomegirl.com, and I just kind of talked a little bit about how much it costs to buy a home. And so, again, that's why I invited Beau today to talk about where we can find that money. If you are a first-time home buyer, you're likely in that price range of about $125,000. And so that, when we put all of those funds together, it's going to mean that you need to come up with, there goes my phone, about $8,000 to buy a house. And that's a chunk of change, especially if you have student loans and all that, isn't it, Beau?
Yes, it certainly is. It starts to add up really quick once you get going in the home buying process.
So one of the most common ways that people will get some funds to close is with gift money. They will get a family member or somebody to give them some money to put towards their first home. But it's not as simple as Aunt Gladys just putting a check in the mail and sending it over, and then they just bring that check to closing, is it?
No, it certainly is not. And I'll start off first by clarifying exactly what a gift is. So a gift is a contribution of cash or equity with no expectation of repayment. So you can't get a loan to get another loan, essentially. That's why it's called a gift. There's multiple people that you can get this gift from to help with your down payment and closing costs. Really, the number one is family, of course. In most instances, you're getting that gift money from your parents. Grandparents is probably the number 2 source of gift money. But like I said, you can get that from your family members, your employer, or if your employer has a labor union, the labor union can contribute to that gift. A charitable organization or a government agency could also give you the funds for your down payment and closing costs. So, each scenario is pretty specific, and that's where I dive into with the borrowers. If they are getting a gift, that's where I go into the spiel later on of, who it's coming from and how we have to document that. Really, the easiest way to document that is, if you are getting, that gift money from your Aunt Gladys, the best thing really is once we do get under contract, Aunt Gladys, she writes she goes out and gets a cashier's check, makes it out to the title company that we're closing with, and also to the borrower. That way, it's just a little bit less documentation that we have to do. We still have to gather bank statements from the individual giving the gift, but if we just get a cashier's check made out to the title company we're closing with and also the borrower, just kind of makes things a little bit easier.
Now, is there a specific timeline that they would have to keep in mind? Can she just get that money to you like right before closing, or does that need to be there in advance?
So I always try to knock stuff like that out in the beginning once we're under contract. But to answer your question, no, Kristyn, it's not just something that can happen, right before closing or something like that. We will actually need to see the funds out of the individual who is giving the gift. We need to see that out before we can even issue the initial closing disclosure that goes out 3 days before closing day. So that's something that needs to take place a few weeks in advance. Like I said, we'll get bank statements, the last 60 days of bank statements to verify that money coming out of the individual's account, that they did get a cashier's check for that. So it does need to take place a couple of weeks in advance. I always try to knock that out in the very beginning, because when having talks with borrowers in the beginning, where is their down payment coming from, their cash to close and all that. So in the beginning, the borrowers and the individual gifting them the money, they have to fill out what is called a gift letter. So that's just another documentation that we will have to have moving forward that I take care of in the very beginning. And then we'll need to have that cashier's check, the bank statements, all that stuff knocked out, at least 2 to 2.5 weeks before closing.
So more paperwork, but well worth it in the end.
Yeah, exactly. I mean, and with the way guidelines are nowadays, I mean, we really have to just verify, where all that money's coming from, just to make sure, it's not just cash that somebody had laying around and then, they just went to the bank, put it in that day, and then got a cashier's check. We have to, verify that money was in that individual's account.
I used to have a broker that would say that it couldn't be, we had to prove that it wasn't money from under the mattress.
Exactly. That's essentially what we're doing.
Okay. And then now, you may have said this and I just didn't, it may have been when my phone went off. Is there a limit to how much gift money somebody can give, or can they give $10,000 if they wanted to?
So there used to be a limit, but now there is no limit. So, I mean, if you want to go conventional or FHA, if mom or dad or grandma or whoever it may be, as long as it is an actual family member, your employee, the labor union, the charitable organization, the stuff that I mentioned earlier, they can, gift you as much as they want, really.
Well, that's awesome. And it can be a combination of, right? It just would be, we have that many times more paperwork, but if mom and dad want to give some money and then grandma wants to give some money, that's not a big deal.
Nope, we can definitely do that.
Well, again, what a benefit to home buyers. And I think from my perspective, it's one of the easiest ways for folks to come up with a little bit of money to put down towards.
Yeah, and really to answer your question on that of multiple gifts, the instance that I run into working with a borrower or a couple borrowers that are using multiple gifts is when they're going through the Oklahoma Housing Finance Agency, doing a down payment assistance program with them. They're technically gifting you that money, but then they'll also get a gift from a family member to help with their closing costs too, because OFA is actually just helping with the down payment assistance. So there are still, your cash to close or your closing costs, your prepays that the borrower must take care of.
Well, you just put us right into our next subject, which was bond money and down payment assistance. Can you tell us what the difference is between those two things?
So like I mentioned, we work directly with the Oklahoma Housing Finance Agency. That's going to be the #1 program that I work with as far as down payment assistance goes, whether it be first-time home buyers or anybody that's just buying a home necessarily. The Oklahoma Housing Finance Agency, I'll refer to it now moving forward as just OFA. They have multiple down payment assistance program, anything ranging from 3.5% down, that'd be an FHA loan, going up to 5% down on a conventional loan. So they have multiple options. There is certain criteria that you have to meet as far as credit score requirements, and then also debt to income ratio requirements. And then also there are multiple programs out there specific to certain area code or zip codes, communities, stuff like that, where they're actually offering incentive to live in that area. Just for instance, I know like within the last year or so, Moore, Oklahoma, which is just south of the metro here, they were offering an incentive last year of a down payment assistance program to live in certain areas and more. So that's just kind of where all the parties involved, like myself as the lender, you as the realtor, and then also the borrowers, kind of all three of us doing our due diligence and finding every program out there available for our borrowers to get them taken care of.
Oh, we have Stephanie's joining us. Hi, Stephanie. Good to see you.
Stephanie?
If you have any questions for Beau about down payment assistance, be sure to chime in. Stephanie is actually a realtor in my office over at Century 21 Goodyear Green, the Edmond office. So she may have some specific questions to throw out there as well.
Awesome.
And then, so you mentioned OFA, and then you've mentioned bond money. Another way that a buyer might be able to deal with the expense of buying a home would be the seller concessions. And what that means is that we're asking the seller to pay some of your closing costs. Now, can you talk a little bit about that? I have some things that I might chime in.
Yeah, for sure. And I mean, chime in whenever, Kristyn, honestly, because I mean, this is going to be, your expertise as well here, because you're the one that's going to be handling the negotiations. Seller concessions are a great thing. This is something I always have a talk with all my borrowers about, but I also do tell them, hey, you can't go in there, making a lowball offer and ask for closing costs just because, you're really taking away from the bottom dollar for the seller. Not every scenario do we get closing costs paid for. In a lot of instances, they kind of get taken care of, or some get taken care of, but do want to just inform borrowers that this is, it's not a given. This is not something that happens every time. It's kind of specific to every scenario that we go through, but each loan program has a different percentage amount that the seller can actually contribute to the concessions. So on FHA, which is a 3.5% down loan, government loan, the seller can contribute up to 6% of the sales price and seller contributions. So what that means simply, if we're just doing easy math, on a $100,000 house, the seller can pay up to $6,000 of your closing costs. On VA, which of course is for our veterans who served our country, the seller can contribute up to 4% in seller contributions. So once again, just easy math, on a $100,000 house, they can contribute up to $4,000. On investment properties, if you're putting 20% down, buying an investment property, the seller can only contribute 2%. So once again, if we're working off a $100,000 house, they can only contribute $2,000 to closing costs. And then on conventional loans, excuse me, it really depends on the loan to value, how much the seller can contribute. If you have greater than 90% loan to value, so if you only put down, 5%, anything less than 10%, the seller can only contribute 3% to the seller concessions. If you put down 25%, anywhere from 10% to 25%, the seller can contribute 6% in closing costs, and then anything that you put down that's more than 25%, the seller can contribute 9% to closing costs. So just, each scenario is a little bit different, but there are options out there to, get some of your closing costs taken care of.
Well, and what I like to tell people, what I like to counsel people who are considering making an offer and asking for that seller to pay those closing costs is first to keep in mind when during a transaction, there are buyer closing costs and then there are seller closing costs. So they already have some expenses involved in this transaction. And so when you're asking them to pay yours, you're asking them to basically pay their share plus all or portion of your share. And so it's something to keep in mind. A lot of times people don't think about that the seller has their own bit of closing costs that they need to pay. So keep that in mind, and definitely go into it knowing you're likely going to be making a full price offer. If it's $100,000 house and you want them to pay $5,000 in closing cost and reduce the price by $5,000, then really your offer is more like $90,000. So it's unlikely that they're going to accept that when they have to pay their own expenses as well. So, and sometimes in some instances, it's even, I've seen where people actually go above in the negotiating back and forth, where the purchase price ends up being above the list price. So if it was listed at $100,000, the offer comes out to be somewhere around, or the accepted offer comes out to be around 103 or 105, and that includes those closing costs being paid. And as long as the house appraises for it, it's fine. It's perfectly fine, and it's a great way for a buyer to keep those reserves to be able to maybe do some things to the house and not have, because it doesn't, you can speak on this, the difference doesn't make very much in their payment per month.
No, and I mean, really, it's not going to impact their payment really at all. That little bit, I'm glad you did bring up, as long as it appraises for that much, because, the bank is not going to lend on something that is going to appraise for, less than what the agreed upon sales price was. So let's say, you agree upon $105,000 for your sales price. If the appraisal comes back in at only $100,000, the bank is not going to, or the mortgage facility is not going to give you $105,000 to lend on that house since it's only worth $100,000. The appraisal is in place to not only protect the borrowers, but also protect the lending institution also. So I'm glad that you hit on that as well. That's something that we must, educate people on too moving forward is, just because you agree to something doesn't mean, that it is going to appraise for that, moving forward. Where we are here in the metro, we have a strong market. I don't really see homes coming in under value a whole lot, and that's where all parties involved, as far as listing agent, buyer's agent, everybody doing a really good job in our area as far as pricing things at the right price point to where stuff isn't coming in undervalued. So that is, I'm glad that you touched on that, Kristyn.
Yeah, and Stephanie's back with a really good question that she gets asked often, and I get asked all the time, so we're going to throw it out at you, Beau. Yeah. Her question is, I hear this question frequently. Can I add closing costs in the loan amount? If I find a house that is $20,000 less than what I'm approved for, can I keep the extra $20K to pay for improvements or upgrades?
So that's a tricky question. If we're just going to be doing a conventional loan moving forward that way, no. But there are loan programs out there that we can all discuss like at a later date, to where they do factor in home renovation and all that stuff in there. There's rehab loans, all kinds of loans out there. Just depending on if the subject property is even livable at the time being. If you want to do a rehab loan and live in it at the same time as you're fixing it up. Like if you're just doing like a standard FHA or conventional loan, and you're wanting to move into this house and do the repairs while you're moving in there, you can't just factor that stuff into your loan. It will be, a different loan program. So I mean, there are instances where we can do stuff like that. I almost read it as she was wanting to put the closing costs into the loan amount. So to answer that question, no, you can't just roll your closing costs into the loan amount unless you're, possibly doing a refi. If you're doing like a cash out refi or a rate and term refi, then you can just factor the closing costs into, your loan. Then that's where it really becomes convenient working with a local lender, somebody that is going to service their loans, because really, if you go to refi, at that point, you shouldn't have much closing cost at all, because we will already have your escrow account set up with us. So I mean that knocks out a big chunk of your closing costs right there. But going back to answer the original question, if you're just doing like a standard conventional FHA loan, no, there are loan programs in place out there, for home renovation, home ready, home possible, stuff like that, are becoming more and more popular because people are wanting to, buy that house that needs a little bit of work and put the work into it themselves and, get that equity out of it moving forward.
Yeah, so really, I guess the short answer is for a typical first-time home buyer getting it, you're usually going to be getting an FHA loan, and so the answer is no. We'll try to find other ways for you to get that home paid for, to get into the house, such as gifts or getting that closing cost assistance, maybe even some down payment assistance. But you don't leave with cash back, and and you're not going to get to roll any of that into the loan.
Although I do have some instances, depending on the scenario, I don't want to say you'll never get cash back because, depending on the scenario, I've had situations where the buyers went down payment assistance through OFA. So, of course, their down payment was paid for. And then they also got seller concessions. We were actually doing an FHA loan. They got the full 6%, seller concessions that they could get, excuse me. And then also with the credits that they'd made throughout the process, as far as, paying for their appraisal and then also paying for their earnest money, you get credited for that at closing. They were actually able to get money back at closing. So instead of bringing a check to closing, they got a home and they went home with, a little extra money just because of the way the situation worked out. That's not always the case. It's kind of just one of those. Yeah, it's a one-off scenario. I mean, I have it happen, every now and then, just because of the way we structure things. I love working with first-time home buyers. That's really been a big bulk of what my business has been, is first-time home buyers, and they're the ones who really need, all the help that they can get. Because
they're my very favorite buyers to work with. I love them.
They really are. Same here. I love working with them just because I love the fact of, educating people, of the process of buying a home throughout the process. But also, I like to be that resource for people to be able to lean on, because most people buying a home, my generation, they didn't even know what a mortgage was, and so it's really nice to be able to, set that tone and be an example and, be a good person for them to lean on and be a resource for them to, any questions they may have going forward.
Well, I can attest to the transaction that we worked on. You were a great communicator with that client, made sure that he knew everything that was going on throughout the transaction. It wasn't his first rodeo. He had bought several homes before, but he still had questions along the way, and you answered them as we went.
Yeah, and really, it doesn't matter if you're a first-time home buyer or if you've bought, 5, 6, 7, 8 homes. There's always going to be, this market is always changing. Guidelines are always changing. So, if you bought a home 3 years ago or even a year and a half ago, some of the stuff's going to be a little bit different now than it was then. So, like I said, stuff's constantly changing. Our guidelines are changing. So, really, you're never going to have, an instance where, you're not educating someone or, maybe teaching them something new or, that's where you just kind of have to be an open book, 100% full disclosure and communicate everything with them. That way they're very involved and they know exactly what's going on the whole time.
Well, Beau, before we close out for today, would you like to take a moment and, tell the folks anything about where the rates are, or anything where you see things going this spring?
Yeah, I'd love to, and I appreciate that, Kristyn. Well, rates right now, I don't know if anybody's really been following along, but rates over the last few weeks have really kind of started to go up. Nothing terrible or anything like that, because we were at historic lows over the past year and a half, but they have started to go up a little bit. And that's just with everything that's gone on. The government shut down a few weeks ago. There's been a few different talks of possibly shutting down again here pretty soon. Our State of the Union address that we had about a week and a half, 2 weeks ago, also affected our mortgage rates too. So rates have gone up a little bit, probably from where we were about a year ago now. They're up about 3/4 to a full point. So I see us kind of sitting, right here for a little while. The buyer's market is going to get really hot coming up here pretty soon. So we're getting to the tail end of February. So, March, April, May is going to be a really good time for us. But if you have any questions, just give me a call down there at the number listed. That's my cell phone. I always have that with me. If I can't get to you right away, I'll give you a call back as soon as possible.
Well, thanks for answering everybody's questions today. And remember that just kind of point out that if you're not watching this live, you might be watching it on a replay, either on Beau's page or if somebody else is sharing it. Remember to just put in your questions in the comments or reach out and give us a call directly. And thank you so much. And I really appreciate it.
I appreciate it. You have a great day.
You too.
All right. I'll talk to you soon.
Okay. Bye-bye.
All right. Bye-bye.
And I'm just going to close it out by saying, remember, if you're thinking about buying a home, chances are some of your friends are too. So be sure to share this information because they may have questions about how to find money for their first home. Tune in next week and we're going to talk about investment properties. Have a great day, guys. Bye-bye.